Good morning, everyone, and thank you very much for joining the morning market review. Today is the 7th of August. My name is Russell Shaw. I'm a senior market specialist at FXCM. Just want to point out my email address, rshaw@fxcm.com. And if you need to correspond with me, that is the email address to use. Just going to go ahead and bring up our disclaimers. The first disclaimer is the high risk investment warning. I'll keep this on screen for a few moments for you. Okay, thank you very much. And here is our market commentaries disclaimer. Keep this on screen as well for a few moments. And just finally our references, and you can see that we'll be using MarketScope and TradingView. And I think with that we can bring up a TradingView. And then we saw the jobs data on Friday came in under expectations. This is the US 2-year yield. We flagged 5% as the resistance area, which is this shaded horizontal. If we go through to the daily chart, you can see that we have a big decline on Friday. Okay, big decline on the 2-year yield. And what's interesting about the 2-year yield, it's a good proxy for monetary policy. So the market seemed to be giving some sort of signal that it expects the tighter monetary policy to moderate, which is effectively saying perhaps another skip or pause from here. In other words, the July hike possibly the last in this rate hiking cycle. Let's just go ahead and take a look at the US dollar. And remember that the 2-year yield came down on Friday. And if we just take a look at this on a daily basis, you can see that it came down. The dollar came down on Friday as well. But let's just do a top-down analysis here. You can see when we add in some peaks and troughs, we've got a lower peak, lower trough. And now we're looking to see if we get the next lower peak in the series. And certainly there is some selling pressure. As you can see from last week's candle, there's this big upper shadow. So certainly some resistance above. And we want to see if we get a reference candle reversal. And the way we would see that is if a candlestick would close below the reference candle's low. So we just want to see how that plays out. If we go through to our daily chart and take a look at it in terms of the zones, we're still in zone 1. Okay, we're still in zone 1. So the question is, are we going to get some sort of corrective action here? In other words, 1, 2, 2, 3, and do we get the impulse move up? Remember, if we take a look at the weekly, there is that resistance above us. So it's quite speculative to see if we're going to get some sort of impulse move from here. If we go down to the hourly chart, we can see that on the hourly chart, there does seem to be some dollar strength this morning. You can see that we have golden crossed the 5-hour EMA above the 10-hour EMA. We can see that the stochastic has crossed bullishly, and the dollar has moved into the upper quintile. The longer it stays in that upper quintile, the greater the likelihood that we get a swing up. So we just want to watch that very carefully. But again, I want to stress the fact that we've got this big upper shadow on the dollar, putting some overhead resistance above us. So we want to be quite careful about that. Even though the dollar is showing some sort of corrective action in zone 1, even though it is moving into the upper quintile, take a look at the hourly candlestick as we move towards the cash open, and you can see that it is a doji. Okay, so some uncertainty coming in there as the day opens. Let's just take a look at Euro US dollar. See what's happening there. Again, we'll do a top down starting from the weekly chart. And what we've been looking at is the potential for the latest movement to be a higher trough. And let's just get some of these ellipses out of here. I'm just going to delete them. And what we would be looking for here is to see if this week's candle can close above last week's high. And if we close above last week's high, then we have a reference candle reversal, potentially locking in that higher trough. If we take a look at this on a daily chart, all right, let's clean this up. Okay, let's just clean this up. Let's take all of these out, this ellipse out as well. All right, and we're on the border of zone 3 and zone 2, zone 3 being the bearish area, zone 2 being the neutral. But what I find quite interesting is Friday's candle is a bullish reference candle. In other words, it has it did close above Thursday's high, and Thursday's high is effectively a reference candle high. We want to see if that's going to lead into some sort of movement to the upside here. Again, what would be the fundamental push of that? The fact that the 2-year yield is coming down following that jobs data on Friday. Okay, keep an eye also on the RSI, just to see if the RSI pops above 50. Okay, we're not there yet, so we're being quite speculative at the moment. But again, where does this all stem from? Go through to the weekly chart, and you can see we've got this lower shadow. So there's a bit of support. Just like there's that upper shadow on the dollar, there's the lower shadow on the euro here. So potentially some support. And if there is some support, is there going to be an upward swing? Well, for us to measure that, we go down to the hourly chart, and what we need to see is we need to see a golden cross by the exponential moving averages. We would need to see a bullish cross of the stochastic. Once we get that, then there's some bullish action, and then we would need to see if it moves up towards the upper quintile. Just be careful at the moment because it is moving towards that lower quintile. So the hourlies do have some danger associated with it. What's the danger? Well, the momentum is moving towards this lower quintile on the euro, and if you go back to the dollar, it is moving into the upper quintile on the US dollar side of things. Okay, here's the US dollar, and if it holds it upper quintile on the dollar, and if it holds the lower quintile on the euro, then we'll start seeing some impulse being effectively running, and we'll see if there's some sort of counter trend movements there. All right, let's take a look at one more. Let's take a look at one more Forex, then we'll take a look at gold, and we'll take a look at the DAX. Let's just go through the pound. After the pound, look at gold, then we'll look at the DAX. Okay, so we'll do a top-down analysis with the pound as well. We'll see what's happening with the weekly, then we'll see what's happening on the daily, then we'll see what's happening on the hourly. So let's go through to the weekly first. And again, we're looking to see if we get a higher trough in. The way that would need to chart out is we would need to see some sort of price action that carries the candle above last week's high and effectively closes above last week's high. Again, there is some sort of support there. How do I know that? There's that lower shadow. Okay, so there's that lower shadow. We go through to the daily chart, and not quite as strong a signal as we saw on the euro. Let's just clean up this chart and do the analysis on the daily. All right, so if we take a look at Thursday's candle, okay, here is the reference candle, and we just want to see if we can close above the reference candle. Friday we did close above it, but it's really not the most convincing candle, isn't it? Because there is a upper shadow there as well. We are by and large in zone 3, and we want to see if it can move above zone 3 into zone 2. How come? Just because we've got this buying tail on the weekly. So if we've got this buying tail on the weekly, let's just go down to the hourly, and what we would need to see here is a bullish crossover of the EMAs and a bullish crossover on the stochastic. We've got the same problem on the hourly chart on cable as we do with the euro and on the dollar, is that we have to be careful. There is a lower quintile position here by the stochastic. The longer it maintains here, the greater the likelihood that we see lower pound US dollar prices ahead. So we really need to see if there's going to be a golden cross here in the EMAs and a bullish cross of the stochastic to line up with a bullish tail on the weekly chart. So a little bit of ambiguity to start the week. All right, let us go through to gold now, see what's happening on the precious metal side of things. Again, a top-down analysis. All right, so we'll start off. What we have here is a bull trend. Bull trend because there's a series of higher troughs, higher peaks. Then we've got a breakout from a falling wedge pattern. And the falling wedge pattern is showing signs of a classic pullback, and we just want to see now how the candlesticks behave given last week's low, and we want to see if we can push to the upside here. Why would we want to see a push to the upside? Well, the bullish breakout from the wedge does suggest some sort of bullish momentum to the upside, but we need some sort of cooperation from price, and the only way we're going to see that is if we get a bullish reference candle reversal. So we're still waiting here, and the momentum actually testing the 50. It's pushing onto the negative side of the 50. So gold's showing some sort of sluggishness. If we go through to the daily chart, it is in zone 3. Again, if we are giving weight to the weekly chart, let's just take out the let's just take out the line studies here. If we're giving weight to the weekly chart and the fact that we've got this continuation pattern breakout on the weekly, well then what we need to see is if there is a bullish reference candle reversal here. Price needs to close above the Friday's candlestick, and if it closes above Friday's candlestick, potentially starting the upwards movement. Let's go down to the hourly chart here, and on the hourly chart here, what we would need to see in terms of timing purposes: golden cross on the EMAs, a bullish cross on the stochastic, and the stochastic making its way up towards the upper quintile. That would put it into sync with the weekly chart. Until we get the sync up with the weekly chart, just be careful, because it does look as if the stochastic making its way to its lower quintile. Well, we're going to take a look at one more chart. We'll take a look at the DAX. So let's just go ahead and bring that up. Again, we'll do a top-down analysis from the weekly down. Go through to the weekly chart here. And you can see that the resistance area that we flagged at about 16.4 still very strong, and there was a massive reaction last week that pushed price right down. Let's clean these up, and we'll start putting in some labels. Okay, and I think what we can do, okay, is we can put in a reference peak over here. We could put in a reference trough over here. Okay, we can then take a look to see, let's make this peak here rather, trough peak, and we can now look to see if there's going to be some sort of higher trough that's coming in, but I've got a question mark there. Okay, that was a big sell down in the DAX last week. If we take a look at the daily chart, it's pushed all the way back down into zone 3. Okay, let's just clean this up as well. So unlike the currencies, which tend to have some sort of a bullish bias, I don't think we have that in the DAX. We've got just a big sell down here. I think this is a Marubozu, and if that's the case, we've got to watch zone 3 here. The momentum is to the downside. I think we can even call this a bearish engulfing pattern, and that's the case. We've got the RSI below 50. We've got the DAX positioned in zone 3, and if we're in zone 3, well, what we can do here is we can watch for a dead cross. Okay, so is there going to be a dead cross to the downside? And if there's going to be a dead cross to the downside, is there going to be a bearish cross on the stochastic? And if we get that bearish cross on the stochastic and it falls into the lower quintile, then the DAX could be in some trouble. The cash market has been open for about 8 minutes, so it does look as if there is some support at the central pivot. So that's the all-important level. If that central pivot level fails and we get that dead cross and the bearish cross down on the stochastic, well then we could potentially get some more bearish action on the DAX. All right, that's where we'll leave it for this morning. Thank you very much for joining me. Have a good day ahead, a good evening ahead, and we shall chat tomorrow morning. Thanks very much.